All right, we're back for another Friday financial wrap up with Mr. Michael Zuber. How are you, Michael?
I'm doing very well, man. Folks don't know what we go through sometimes with technology. We tried the desktop, we tried Zoom. It's all not working, so we're going to do this from your phone. I appreciate you sticking with it.
Can you see that toilet that I'm pointing at?
Yeah, I can.
That was the potty training toilet for my son, and then I do funny videos with it. So that's what's going on with my little home setup today, my studio. So that's why I'm on my iPhone. Let's get right into it. So this is for December the 20th, 2024. Can you believe it's Christmas in just a few days, Michael?
No, it's 5 days away. It's unbelievable. Yeah, and then the year is what is that? 11, 12 days for being over? It's wild.
It is wild. So let's get into it. The Fed this week, we got a rate cut. I don't think you and I were definitely not surprised. What were your thoughts on the Fed rate cut? Where are we? What's going on?
Well, there's so much to unpack with the Fed. First and foremost, I was very clear with my audience. I said, I think they will, but I also said, I think they shouldn't. And I think you actually heard Jerome Powell admit that during the Q&A. I have some quotes that I wrote down from his press conference. Hopefully I can find them. Here it is. Today was a closer call. So what I think Jerome Powell was telling us is, frankly, they didn't want to cut. I think given inflation and growth and jobs, they didn't want to cut. But because Jerome Powell is so adamant about, forward, leading the market, he was backed into a corner and they had to cut. And as expected, rates went up, not down. I think it blows people away. Now, why did they go up? Well, they basically said less cuts are coming, 2 instead of 4. Interestingly enough, one Fed president agrees with me. I've been very clear with the audience that I thought 0 cuts would come in 25. And there's one Fed president that agrees. 3 of them think we'll have 1 cut. So again, it's pretty telling. Also, they raised their inflation. They thought it was going to be 2.1, now 2.5. Inflation's not going below 2% until 2027. And then there was lots of talk about the job market weakening. And, basically, yeah, I stand by my statement. They should not have cut, but they did. So here we are.
Yeah, and again, no surprise to us. And again, like you said, interesting that with 30-year mortgages, let's talk about what happened with rates. What did you see? And let's unpack, what does this mean to housing, 30-year mortgage, one real at a time community?
Yeah, so rates shot higher. Rates yesterday, are now over 7. I think they went to 7.13. Close of business Thursday, they're going to probably be at 7.2. Rates are up. And I mean, it's really funny. You and I have receipts. I told people a month ago, 6 weeks ago, that I thought 2025 would average 7%. And, the last 3 or 4 weeks, I took some shots because rates had trended down a little bit.
Yep.
But I didn't change my opinion. And, lo and behold, rates are significantly over 7% now. We'll be heading into the year over 7% like I thought we would. And there's talk about going higher. T. Rowe Price and I forget who the other one was. Another institution actually thought the 10-year could be 5 or even 6%, Ty.
I did see
in
that.
2025. Oh my goodness. We're talking 8-9% mortgage rates if either of those are right. I'll withhold what it means for 2025 because I want to close there. But yeah, rates are higher and rates are going to be higher. Stop hoping for rates to fall. It's not coming.
100%. And it's interesting, Michael, if you were a viewer, a listener of the show, right? If you've been following daily financial news, if you've been watching the Friday financial wrap up for the last 3 to 6 months, you should not be surprised that mortgage rates actually ticked up with the Fed lowering rates and that we're still hovering plus or minus 7%. And that's something you've said, Michael, higher for longer. So let's talk about existing home sales. What happened this week and your take on it?
Yeah, well, so the November home sales, existing home sales looks like an outlier because, again, we had a little bit of time where rates fell and existing home sales popped. Again, folks, rates matter. The closer you get to 6%, the more transactions we have. So sales went up 4.8% in November compared to October. They were up 6.1% year on year. So November to November. Prices are up, all of this stuff. But again, I think it's all because we had a momentary drop in rates, post-election and all of that. So I think November sales came in at something like 4.16. It wouldn't shock me given where rates are going that, December, January, February, we're back below 4 million.
Yeah. And again, I think too, for the viewer, the listener of this show, it's a bit of a head fake because there's been so much pent up demand all year long. You just have people that have money and assets that said, F it, we're just going to get into our home before the end of the year, right? Would you agree, Michael?
No, I think that's exactly it. We saw a lot of people out of the market post-election. The election came in. We saw a 2-3 week bump of really a flow of activity. So there were just a bunch of people waiting on the sidelines. I think all of that data showed up in November. And November on the chart, November is going to look like an outlier when we add on January, February, and March.
Got it. And again, for realtors, for folks, I think, again, that we want to be paying close attention, higher for longer, and we'll talk more about 2025 and how to plan for it. But again, just because that uptick, it's not like as if sales are coming back in a big way. Agree, Michael?
I'd love to be wrong. Don't get me wrong. I would love to be wrong on this, but yeah, I think we're going to be below 4 million.
Okay. I would agree. I would agree because I see it. I talk to realtors every day. Let's keep going. What's happening next week? Talk about next week in terms of financial news and where are we at for what's going on next week?
Well, I think what's the next week and probably the next 2 weeks, it's all going to be about what the Fed presidents say, because the Fed presidents are essentially telling us, the job market is weakening. Inflation is not over. We're concerned about tariffs. There's all of these concerns. And I think you're going to start to see the Fed presidents break apart. I think for a long time, the Fed was speaking on the same book. I think you're going to see some bears, some doves. And I think it's going to really be interesting trying to translate what all this means for the Fed going forward. I think at this moment, you can pretty much count on a January pause. But yeah, I'm really going to be watching the Fed presidents because it's always important to watch at inflection points.
Yep.
I think for a long time, it was clear the Fed was raising rates. They were going one direction. Then it became clear they were cutting rates. Well, now we're at an inflection point. So I'm going to be listening closely to what they're saying.
I would agree. And it's interesting. Let's get into 2025. What is your take? I mean, I know we've talked a lot about that over the last probably 2 to 3 weeks. What do you see in 2025 based on where we're at today with the Fed, with the 30-year interest rates, with housing inventory? What are your thoughts for 2025?
I think 2025, and it brings me no joy to say this, no joy. I think 2025 is going to suck unless you're one of two people. If you happen to be a home builder who figures out how to be profitable building entry-level housing, you're going to crush it. That's group one. And group two, again, it brings me no joy to say this, but for my community, the second people who are going to win are real estate investors who do the work, have focus, have daily discipline, write disrespectful offers, follow up, understand creative financing, write a cash offer, write a creative financing offer, and then follow up. I believe that the One Rental at a Time community will likely put together their best deals in 2025. Why? Because it is going to become remarkably easy to find motivated sellers. It's just where we're going. Higher for longer is going to suck. First-time home buyers suck. They're supposed to be 40% of the market. It might go down to 20%. It's going to suck. If you're paid on transactions, it's going to suck. I've told you months ago, I think 2025 will do less transactions than 2024. It's going to suck. If you're in mortgage, it's going to suck. The refi business is dead, buried, gone.
Yep.
You know, there is a silver lining called January 2026, but dude, we got to get through 2025 first.
Very, very interesting times. And I'll echo everything you're saying. Everybody I'm talking to, it's, hey, double down on the work. You just got to outwork everybody. And also, too, there's in this time of year, one of the big themes that I've had with, talking to hybrid investor, realtors, agents, brokers, is that this, typically November, December is separation season, meaning that you can not only get deals because a lot of people are asleep at the wheel, either listings, buy deals yourself, seller financing, people that want to close before the end of the year, sellers who need to sell. So that's a big part of separation season. But I believe the theme for 2025 will continue. I think it is separation season in general. Next year will be a separation year where some realtors, some people are not going to do the work and they're going to have to go find other jobs. Whereas, people that really double down on the work ethic and lead generation and, like you said, buy box, focus on opportunity, making offers, all of that. I think those are the people that win in 2025. Michael?
No, I mean, again, you're going to find out who's in it to win it. 2025 is not going to be fun. It's going to be a lot of work, probably stressful, but you should see that as good news because that's how diamonds are made. It's made with pressure. And if you could be the one that gets, because here's the deal. This will be, in my opinion, the last hard year and probably the hardest year. But 2026 better than 25, 27 better than 26, 28 better than 27. And if you want to feel good about my call, don't take my word for it. Go back and look at the history. I have told you we are repeating 1978 to 1981, 1982. And then watch from 1982 to 1996, it got better every year until we finally beat 1978. It could take a long time to get back to, 2022 peak transactions. But the good news is if you survive 25, you're going to have no competition. You're going to be at a buffet and it's going to be your choice and there's nobody else there. But we got to get through it. 2025 is separation season.
I love it. I love it. Michael, tell them about Las Vegas. Tell them about February so that they can get themselves there.
Yeah, you got to get to Vegas February 15th, 16th. It's the second annual ORAD event. We're going to have, 12, 13 amazing speakers. You're going to get to ask them questions. You're going to get to interact with, 300-400 other people that are going in the same direction. If you haven't started yet, get your butt there. If you're stuck in the suck, get there. If you're a couple, get there. You're just going to want to be around other people going the same direction. And, it's President's Day weekend, so you travel back Monday. It's Valentine's Day on Friday, so come out a day early and celebrate in Vegas. It's kind of the perfect place to be, that long weekend.
I love it. Folks, get your tickets. Go to Eventbrite. You can find the one rental at a time event page on Eventbrite. Michael, thank you for all that you do. Everybody out there, Merry Christmas. Happy holidays, Michael. Thank you for all that you do. Merry Christmas, brother.
You got it, man. Take care. Later.